Friends, today I want to talk about an innovative investment opportunity in the startup space, which is the Piper Serica Angel Fund, which comes under the alternate investment fund category 1, which is regulated by SEBI. Let me tell you why you need to consider startup investments under the category on the alternate funds. The first thing is that when you are investing in a stock, which is you are doing through a mutual funds, when you're investing in a government securities and corporate bonds, you are investing through debt funds and other things. Whereas there are some investments which is not available in the mainstream, but which is available in the alternate investment funds and which are regulated, which are follow the due diligence process, and which is also has an immense value. In a developed economy, if you notice, you will always see that alternate investment funds take a good amount of exposure in an investor's portfolio. Slowly, that trend is also happening in India, and the growth of startup is one such example, where India is number 3 in the number of unicorns being produced, number 2 in the list of startups being registered, and when coming to new startup being invested, we are number 1. We are ahead of US also. And the most important thing is that this Piper Serica as a company has got a good amount of experience in the startup investment space, as they have done it earlier, even before the regulations. And then after that, they have started the series 1, where 15 companies in the first series is already being finalized. That consists of Fintech companies, Agritech companies, Edtech companies, companies which are into warehousing, companies which are into educational course funding, which are into different aspects which are not available in mainstream, something like EV leasing, EV financing, something into ad detection, ad prevention, something like helping investors to have a better connectivity, and which are these ideas are all founded by the IITs through their incubators, where they have a strategic tie-up. And this investment also comes with a illiquid thing, where 30 lakhs is the investments which is spread across 2 years, where initial investment of 10 lakhs, now after 9 months of 10 lakhs, another 9 months, or the final tranche will be another 10 lakhs. But by investing in the startup, you are getting exposed to new sectors and new ideas, and you are also creating wealth, which is which can be very the multiples will be much bigger. And they are investing in a stage when the companies already has a good amount of cash flows, and before the PE or the venture fund comes in, they invest in the pre-series fund, where the exit is done through 3 ways. When the company is strategically bought out by a strategic investor, or the company is going for higher up rounds like 10x or 20x for a huge expansion, or when the company is directly getting into the listed market in the main bourses. So that's also an option where all the exit, when a company exits, all the money is not reinvested, it is being given back to the investor. But the thing is that this is a illiquid investment, being a startup investment, and anybody who has got an investment horizon of more than 5 years only should come into that, because of the illiquidity reason. But the returns will be very high because they have a very good process. They finalize one company out of 100 startups being available for scrutiny, and they also have a Yoda.ai, which is an artificial intelligence tool which will try to help them to minimize the human error and ask objective questions to drill down the companies and to choose the companies which has got more than 70% score, which is also a qualitative way of analyzing a company. And with a good economy, with many young investors, and the economy is zooming big, and we are also transitioning from 4 trillion to 5 trillion to 7 trillion economy, startup will become a integral part of the investment world. And don't miss out on this, because this investment might be open only during which is opening on April 15th, and which will be available only till June. So once the company gets the investment, say like 100 to 120 crore, they might stop, because last year when they want to close at 120, they crossed 150 crore and they are forced to stop it because the size has become so big. So now I appeal to my investors who have already invested, they can stay invested. The others, it's a very good opportunity to participate, and we can have a detailed discussion to take it forward. Thank you.